Morning, everybody. Mike Vacchi, Princetontrader here for Mr. Topstep with your Monday morning pre-market webcast. So we've got another gap down situation here this morning. We're currently trading 1194.75, down 19 and a quarter, about 1.5%. Let me say this right off the bat. We are now about 40 handles below the 200-day exponential moving average on the E-mini. And we have now decidedly broken that bearish wedge to the downside. So I am firmly in sell rally mode right now. There's a lot of wood to chop up above between pivot levels, Fibonacci levels, and just other resistance areas. And we're going to get some rallies in here. But I think your priority has got to be to sell those rallies. And not get really cozy with any long positions in this kind of an environment. We're not going straight down, we never do. But we are certainly not going straight up back to 1250 and beyond. We continue to consolidate, but it's with a downside bias. So we opened up last night and we made a low of 1201. I tweeted out last night that if 1201 can hold, that's fine, but 1196 would be my next level down. We moved down to 1195, 1196, and we bounced around there a little. We made a low at 1192 even. What we did not do was take out the 45-day pivot down at 1190.25. So I talk about mean reversion all the time, and I talk about pivots getting stretched. When we were up at the 87s, we were about 80 handles above the 45-day pivot. We came back to be as close as 1.75 handles away from the 45-day pivot. So I'm a big believer, as far as a little more intermediate term trades, that things tend to revert to that 45-day pivot. Right now, I am long 1193. Didn't take that pivot out. I've got a stop underneath the 45-day pivot. So I'm going to let this work a little bit and see how the day plays out. I think we're down quite a bit between Friday and today, and I think we need to work a little bit of that off. We were certainly short-term oversold. We're at 1195, and our daily pivot today is up at 1217.33. So that's starting to get a little stretched for a daily. It's not incredibly stretched, but it's pretty stretched, and we are 45 handles below the 20-day pivot. So we're starting to get a little stretched in the other direction, and I've got a long on. So like I said, you stops, be hedged. The Europe issues are still squarely on the table. Now we have to deal with the super committee, basically saying that they give up, and that is not going to make the market feel good about longer term prospects for the economy with respect to our debt. The other thing that I think it's going to do over the next 3 to 6 months, you're going to start to hear little rumbles about whether or not the United States is going to get their debt downgraded. That gets back on the table if what the super committee does or fails to do is not deemed to be sufficient by the ratings agencies. I'm not making any predictions. I'm just saying you're going to start to see that kind of chatter in the tape now, and that kind of chatter is bearish. Let's look at support and resistance. Okay, current trade is 95 even. Let's do the upside first. 1202, 1203. Then 1206 is a level for me, but from 1204 up to 1208, you've got multiple Fibonacci levels. There are 3 separate levels in there, and so I'm just going to call 1204 to 1208 a real cluster, and that's what I mean when I talk about selling rallies. You've got these clusters of resistance everywhere. Then you've got 1213, 1217, 1222, and 1226 to 1227, which is a big level. Down below, 1190.25. 1188 to 89, 1184.70, and 1178.60. So everybody trade them well today. Mike Vacchi, Princeton Trader for Mr. Topstep. I will see everybody back here tomorrow morning. Have a good one.